And plus, he's a great guy, great to work with. And one fun fact about Ross is that he runs every morning at 4 a.m. And he has a target of hundreds of miles every year of running. Um, and so with with that introduction, I hope everybody has a good time.
Sid, thank you for the kind words, and I'm embarrassed that everyone knows that I'm a bit of a maniac when it comes to running. But yes, it's true. It's great to be here with you all. I'm thrilled to spend some time this evening. I've attended a few TIE events in the past, and to be asked to moderate this panel is quite the honor. But I'm thrilled to play a bit of quarterback here because you're about to meet Sean O'Brien and Eric Crane, and their backgrounds are quite impressive. So I'd happy to fill in a little gap, a couple of the gaps on my background, and then I'll turn it over to Sean and then to Eric to introduce themselves. Yeah, Sid mentioned I'm an Atlanta native actually. I spent about a decade at the Coca-Cola company. The first 5 years of my time there, I was building a startup really inside of Coca-Cola. It was a marketing SaaS platform that allowed Coca-Cola to distribute, customize, and share their marketing materials, their on-standard, on-brand marketing materials at scale globally. I had the amazing opportunity in my 20s to roll this out globally to 200 countries. I traveled to over 55 in person. And it was a lot of fun, but it also made a real impact to the company. It allowed the company to save $500 million over the 5 years that we were building and really scaling the business. It was an incredible opportunity. It went well and it got noticed, and it actually led to being asked to start and lead Coca-Cola's first, what became their seed stage venture capital arm. So saw the good, the bad, the ugly of how do you incorporate early stage startups inside of a major corporation. We did this at scale. We launched this in 11 cities around the world, from Tel Aviv to Sydney to Singapore to San Francisco, all the S's, and many others. So amazing opportunity. And then I left Coke to start a venture capital fund, a consumer tech fund. As Sid mentioned, we had a partnership with Kids 2, which is a major baby toy and gear company here in Atlanta, headquarters in Buckhead. So that was our strategic partner. So any company we invested in, we look to leverage that kind of a relationship. And since then, I really missed CPG, e-commerce, and retail, and just had the great opportunity to meet Sid, almost a year and a half ago now. So happy to share more, excited to share more about Silicon Road. We're a low $30 million early stage venture capital firm. We're focused on commerce tech. And by commerce tech, we mean innovation that's happening across retail, e-commerce, and CPG. So looking forward to sharing more with you in our time today. And without further ado, I'll turn it over to Sean O'Brien to introduce himself. Sean.
Thank you, Ross. And I remembered to turn off my mute button. But before I start, that whole at-home beer delivery sounds really good. So next time I'm on a panel, I'm going to remember that. So next time I'm also going to get Sid to introduce me so I don't have to introduce myself, because he did a really nice job. Hi, everybody. My name is Sean O'Brien. I am co-founder and co-managing partner of Overline, which is an early stage venture capital fund headquartered here in Atlanta that I run with my friend and partner, Michael Cohn, who's on the meeting with us this evening somewhere. You probably know Michael. He's been a fixture in the Atlanta startup community for a number of years. He was the founder of Cloud Sherpas, which was a wildly successful Atlanta business. And he was also the founding managing director of Techstars Atlanta, which ran for 3 years. I'll give you my background in just a second, but together, Michael and I run Overline. We focus on pre-seed and seed investments into great founders here in Atlanta and throughout the Southeast region. We're about a $27 million fund. We're about to come up on our final close of the fund later this month. And we are generalists. We like to look at all different types of founders, all different types of business models. As long as they've got big vision and big market opportunities and they're here in our region, then we want to meet them. My background is I'm originally from Texas. I've had a lot of stops along the way. Spent a lot of time in finance, 12 years in investment banking and hedge fund management. Moved to Atlanta in 2003 to take a corporate gig that I thought was going to be a one-year stop on my resume. It turned into a 15-year career with a public technology company. Had a great run, did a lot of different things there, ran different chunks of our business, and primarily focused on strategy and M&A. Did a bunch of acquisitions, and then ultimately led the sale of that business to a private equity firm in 2015. And that's enough about me, but excited to share some thoughts and perspectives here, and more in our breakouts.
Thanks, Sean. And I might add, just to brag on both Sean and Michael at Overline. These guys are two of the most transparent, generous with their time fund managers I've met anywhere, and we have them here in Atlanta. So really grateful you guys are here. You're focused on the South, on Atlanta specifically, and excited to have this conversation. So Eric Crane, I'll turn it over to you.
Yeah, thanks, Ross. And I can attest to that as well. So, I've had lots of great conversations with, Sean and Michael, and they're always willing to provide thoughts or input or insight. So definitely reach out to them. A little bit about me. So I was born and raised in Atlanta, but sort of informed by moving all over the place in the meantime. So it just so happened that I went to Emory for undergrad, was a finance major with a 3.3 GPA from a non-Ivy League school in the middle of a financial crisis. And that wasn't going to get me the investment banking job I had dreamed of, because I figured that was the best way to make money, and had to rethink my life and discovered, like, hey, I can write Excel macros. I could probably write some software. Didn't realize how much I would fall in love with the way that software can change the world. And so really that took me on a journey of exploration around what I really wanted to do. I had this cool software, but how was I going to use it to make change happen? And so just going through businesses, small and large, everything from Epic Systems, which is the largest sort of enterprise electronic medical record provider, doing like large scale technical implementations, to being one of the first 10 people on the Full Story team, helping them get started here in town. Really gotten to experience a lot of sort of businesses at various stages. And one thing I really landed on that resonated with me was working on big, boring problems. Oftentimes the problems that seem really boring or people aren't really thinking about are the ones that are the biggest. So a good example of this in previous experience was when I was working with RentPath. One of the things I was doing was trying to figure out, why is apartment leasing so hard? And especially in different types of markets where there's an imbalance of supply and demand. And that's not something that really is exciting. It's not cryptocurrency. It's not anything that might make a headline, but it is a big problem. We all experience that at some point in our lives. And so that's kind of how I ended up co-founding Flatfile with my partner, David. We found this problem that existed across all of our previous work experiences, and we call it data onboarding. I boil it down to, why is it so hard to get data into your software? So, the saying goes, like, software is eating the world, but what it breathes is data. And if it's breathing in bad data, you're not really going to be able to use that software to its utmost potential. And so we said, hey, you know what? We're kind of tired of filling out spreadsheet templates and standing up SFTP servers to accept data from customers. There's got to be a better way to do this. And so that's really what we're focused on now. We are a venture-backed business, so we've closed a few different rounds of capital, including during the pandemic. Had a lot of experience in a very short amount of time raising capital. Happy to talk a little bit more about what the funding landscape looks like. And I will note that we are hiring, as well as be a distributed business as well. So we have a lot of focus on Atlanta just because we're bullish on Atlanta in general, but also are working with folks everywhere.
Thanks, Eric. I love how you put it, big, boring problems. Sometimes those have the biggest opportunity, right? So can't wait to have more discussion. The final member of our board tonight is Shila Burney. Shila is the managing partner of Zane. Shila, I'll turn it over to you.
Sure. So, hey, everyone. I am the founding and managing partner for Zane Venture Fund. We're raising $25 million to invest in diverse entrepreneurs and teams, primarily here in the Southeast, but opportunistically across the U.S. We are investing in tech-enabled solutions. Our goal is to be able to bridge the gap between seed and Series A. We know that entrepreneurs, their companies typically die in seed, and so we want to be there for them once they get ready to raise additional capital. Our focus is on, again, diverse teams. We are looking to be able to kind of, solve the problem around access to capital. And so definitely looking for those who have diverse teams. We have found, we were industry agnostic. We found a couple of areas that we're really excited about, and they play very well here in the Southeast, and that is supply chain logistics. I'm sorry, cybersecurity, ed tech, digital health, and what's our other area? FinTech. So we have already made a couple of investments, both out of the Southeast. And so really, really proud of the work we've done in just a small amount of time. We also have Zane Access. Our goal was to not leave any founder behind, regardless of whether we invested in them or not. And so we created Zane Access really to solve the problem around access to networks, access to resources. And we want to make sure that companies are capital ready when they get ready to start talking to investors. And so we have an entire programming arm that not only supports our founders, but the entire entrepreneur community. So really excited to be here and share some of the work that we've been doing here in the Southeast.
Shila, thanks so much. So team, let's jump straight into the question. So if you rewind, gosh, 13, 14 months, it was this like utopia in retrospect. It was long before all the change that's happened in 2020. We don't need to rehash that. I think every one of these I've been part of since March of last year went into that. So let's start where we are today. So much has changed. So much has changed with so many different areas of life. But let's hang on venture funding. So Sean, love to start with you. What do you think in the last 14 months, what has been the biggest change in VC that you're seeing right now?
Well, thanks for starting with me, Ross. I get to go first. I would say a lot's changed in the last 14 months. I think probably one thing is a general setup. There's lots of capital right now, probably more so than ever, aimed at early stage investing in particular. And we're continuing to see investors chasing deals earlier and with bigger checks. It's starting to show in the form of value inflation. A lot of that is coming sort of trickling down from public market valuations, which continue to go up and up and up. A couple other things that then I'll make a point. One thing that I think is amazing that's happening now is venture is finding itself with a wider aperture than it's had ever. It still has a long, long way to go, and I'm sure Shila is going to have a lot to say about this tonight. But not only looking at more diverse founders, but different types of business models and different regions like the one that we're in here. I would say, thinking about this, one of the big changes in venture that's happened, and it's been accelerated here recently, maybe not so much the last 14 months, but over the last couple of years, is a bit of a move away from what I'd call professional investors crowding the field, people with MBAs and a lot of training with private equity firms or other venture capital firms who think like investors, act like investors, talk like investors, see a business through the capital stack and through the financial statements. And you're seeing a really refreshing movement toward a lot of founder-funder transitions with a lot of the exits that have happened. My partner is a very successful founder. Now he happens to also be a successful investor, but I think it just brings a different perspective that I think is really interesting into the dynamic of VC investing, much more heavily weighted on EQ and sort of non-financial factors. And I would love to study it a little bit and write a book about it or write a blog post about it at some point, but I love the same type of democratization that we're seeing in the public markets with things like Robinhood and fractional share ownership is happening, but just in a very different way within venture investing. I think that's really cool.
Sean, thanks. I love the visual, like the wider aperture of investing, the different kind of access to capital. So Shila, turning to you here. So obviously with what Zane is building, you are building a fund around exactly what Sean just described. So from your perspective, what are some of the biggest changes that you're seeing, especially as it relates to Zane? Love to get your input.
So I will say that there's just a lot of attention paid on the Southeast right now, Atlanta in particular. When I first started, I really started in New York. I didn't start in Atlanta because that's where the founders were calling me. We're in New York, and so I did a lot of sort of work there. And then when I launched my fund, I just assumed that we would not get a lot of attention here in the Southeast. Yes, there are some funds that are focused on diversity, and so we didn't know how we would play here. And then when we launched our fund, of course, there were several funds that came out at the same time. But to Sean's point, or whoever point made it earlier, there's a lot of capital in the market. So what we've seen is that there's been so much interest coming from both coasts, wanting to know what's happening in Atlanta and how they can get involved. We've had some of the top players, Sequoia called us very early on and wanted to know, how can we get in deals down there? They want to partner with us and look at particular deals within the Southeast, and didn't have a play here in Atlanta and wanted to be able to partner with some funds. And so we were like, sure, we're happy to sort of co-invest if opportunities come up. And so we've just seen a wave of that, people wanting to find out what's in the water here. We have had all those unicorns come out at one time. And then on top of that, I know everyone knows last week that Paul Judge and some of the folks over at VIP Capital, they announced another $300 million fund. And so all eyes are on us. People are talking about Miami, but I think people realize that there's something special here in the Southeast, particularly here in Atlanta. And I think we're just riding that wave. I mean, and it's a good wave. I don't see it ending anytime soon, mainly because we're just really getting started.
Yeah, Shila, I love it. And I echo, I love what you're saying. Eric, coming to you. So you're on the other side of the table as a co-founder of a heavily funded business with capital that's come from other parts of the country. Yet you still call Atlanta home. Can you describe from your point of view, so what are some of the biggest changes that are happening in VC from your side of the table?
Yeah, so just fully acknowledging my biased perspective. I think there's a shift in how we're thinking about capital and labor in these markets, because the capital isn't the capital anymore, it's the labor, right? Like that's what's doing the work for you. And the capital itself is this rare resource, which is your business idea that you've proven out how to execute against and you found a market problem to solve. And so I think that is really like it's super nerdy, right? But like capital drives markets forwards and capital usually controls markets. And you're starting to see that shift actually play out in venture as entrepreneurs realize like, hey, we have a scarce resource in this company. And I think it's sort of bringing a balance into the market. Again, my biased perspective is I feel like venture capital is clearly getting a great deal before if we're still cutting deals with larger techs and higher valuations now, right? Like the way we start companies hasn't changed. The way we address market problems, it just happens faster. And so we're just seeing that correction happen a lot more fast, especially in an environment like COVID. We've gone through a couple of fundraising rounds in COVID or closely around it, and they've all been very fast because guess what? I don't have to go to someone's office. I don't have to go somewhere else, and you can have 5 partner meetings in a day, which is something I've experienced before. Wouldn't recommend it looking back on it, but it does create a lot of efficiency and helps you get back to building your business faster too.
Yeah, thanks, Eric. I want to hang on the Atlanta like as a theme because I mean, Atlanta's having a moment. Obviously, these headline grabbing things like, of course, Panoramic, the Paul Judge and BIP, $300 million fund, amazing. I think we need 5 more of those in the city, by the way. So that's huge. The talent inflow, I can't tell you how many folks I've met from Brooklyn or the West Coast that said they just want a different quality of life. As Sid said, no wildfires, no floods, no earthquakes even. It's like Atlanta's definitely got that in its column. I mean, we've had these, unicorns, quote unquote, born overnight with Sales Loft, Greenlight, Calendly. Georgia companies raised what, 1.3 billion in the second half of 2020. In Q3 alone, it was 836 million, according to PitchBook and the NVCA. That quarter was the highest venture funding of Georgia companies in the last 6 years, one quarter within those 6 years. In January, Atlanta companies raised $636 million, of course, led by the $350 million Calendly round and $100 million in Sales Loft. I mean, this city is on fire in so many good ways. So, Sean, coming back to you, like, what are you most bullish on about Atlanta? And what do you think still needs to change for our ecosystem really to go to the next level?
Yeah, I'm all in on Atlanta. I mean, for all the reasons that everybody mentioned here, is, you know, I think we have some amazing resources here that are under celebrated. I mean, we have the most diverse talent pool with, I mean, just second to none in any city in our country. We've got 300,000 undergraduate and graduate students within a 45-minute drive from where I'm sitting right now that all would love to stay in this high quality of life, low cost of living, fabulous environment that we've created here. We also do things the Southern way, which is just a kinder, gentler way. We're still aggressive and we still build fabulous businesses, but we do so with a different level of empathy and compassion than I think in some other regions. So Atlanta's a 10-year overnight success. This isn't new. There's been a lot of people before us who've been laying the groundwork to create the ecosystem that's created this moment in time that we're all celebrating right now. For me, the most fun has been a couple of years ago, hearing Atlanta had been talked about as a second tier or third tier city, and now they're talking about it as an emerging market. I think that 2021 is the year that they're going to talk about it as an arriving market or an arrived market that ventures the coasts is competitive with the coasts. So I think to answer your question, I think it's all about the talent, it's the environment, it's the ecosystem that surrounds our founders with the type of access to now capital, but also all the valuable mentorship, advisory that founders need to lean on to get through the gauntlet. What we could be doing better is I think we could invest earlier in helping founders that aren't quite ready to go down a venture route. That might, you know, things like Zane Access, Shila, and the programs that are popping up here in town, they're so critically important. We want to see every founder here in Atlanta. The truth is, many of them just aren't ready to pitch. They just haven't been there. So I think we could focus on that. And then, even though we are all committed to driving diversity in the venture world, both in terms of the founders that are getting funded and the employment statistics in venture funded companies, which is equally important, we're not doing enough. We're not even close. And so that's something that Michael and I talk about literally on a daily basis. What more can we be doing individually and collectively as a community to support that? And I think Atlanta can actually lead not only the nation, but the world in this important path.
Thanks, Sean. Shila, coming back to you. So Zane Access, can you just spend a minute and fill in this group on all the great work happening with Zane Access? Because I think it's, I mean, to Sean's point, just such a needed and value added service to this community. Probably also a very, very smart business move for yourself. So can you just share a bit more on that?
Sure. I want to say one thing regarding what Sean said in terms of the kind of market that we're being talked about. So I tweeted, I think last week, when we were all, you know, riding that wave about how we're not the next market, we're the now market, right? And I really and truly believe that just Tope alone and how he has sort of given so much excitement to young entrepreneurs who, you know, may be struggling in their journey. So back to Zane Access. So for me, when I first started in this space, I didn't start out to be a venture fund. I started out to see how I can help entrepreneurs sort of, you know, my background has been organizational management, project management, that sort of thing. So I thought, let me help them, you know, get their business in order for capital. And so we started out by having events at first and forums, or what we called them, just bringing folks together to talk about a particular area, ensure that we were, you know, we had two types of conversations going on, one for the entrepreneur and then one for the resource on how you connect with us. And so that once we launched the fund, we wanted to continue supporting the entrepreneurs, even though we have a thesis around tech enabled, every company isn't, right? And so we didn't want to leave folks out who still wanted to raise capital, but maybe they weren't a tech enabled company. So to your point, Ross, we didn't set out to do this, but it became a huge differentiator for us as a fund, because we now have a programmatic arm that not only supports entrepreneurs that we may invest in, but anyone who's looking for a company, we've already de-risked that investment for you. And so I think it's really special. We, you know, the companies coming out are doing so well. You know, I can't tell what the company's name is, but one has already raised $1.25 million, and the program just ended in September. So just knowing that we were a part of that and we helped her get to this goal, you know, the proof is in the pudding. that if the entrepreneurs who are not ready for capital, if you give them the sort of resources they need, they can be successful to go in and raise money for their company, and their company could scale. So yes, it's become a huge differentiator for us, but more than that, we are supporting the diverse entrepreneur community in a way that's not really happening in any city. There are incubators, there are accelerators, and we're not trying to be any of those. We're truly a support system for diverse entrepreneurs. So really excited about everything that's happening with that.
Yeah, Shai, I love how you said we're not the next market, we're the now market. I completely subscribe to that.
Yep.
Yeah, I mean, and so I'll do a plug for Silicon Road here. I mean, if you go back 2 years ago, I think Overline, Zane, and Silicon Road were maybe a thought, but they weren't where they are. And each of us were right around a $30 million independent fund. Like that is $90 million of capital looking at pre-seed to Series A stage companies with a big focus in the Southeast. I mean, this is I'm so excited about that, because again, like I think we saw a lot of these companies as they scaled. They got to a point in Atlanta where they reached a ceiling. There wasn't the kind of risk capital that they could raise in Atlanta, so they went to New York or Bay Area to raise the capital, and then they left. We're building this next wave of startups that now will have the opportunity to raise here and to stay here. So
Exactly.
Eric, coming to you, Eric. So with Flatfile, you have a distributed team. Maybe if you can just talk about a little bit about where your company is, how you're structured, and then why do you stay here? Why are you still in Atlanta? And then what can we do to get more of your team to come here?
I will say it is frustrating every time I go to New York City or San Francisco and have to remember to pronounce my T's in Atlanta, or they think I'm from LA. No, so like we have a 30-person business, but like we very intentionally chose the route that we're on. And that's like advice I always give to entrepreneurs is like, sometimes a venture-backed route isn't the right route for your business. I think it's important for you to be very thoughtful about what the right thing is for your business model, your market, and how you're planning on growing your team. And so for us, we said, hey, you know what, this is going to look like a SaaS company, but to start, it's going to have economics that look like an AI company. What that means is that we're going to have to raise a lot of capital. There's a very big market, and we have to paint this vision of how we're going from sort of an initial wedge to sort of this broader potential that this business has. So proving out capacity at every stage of the business is really important. And for us, again, with investors, the way we approach that was saying like, hey, we're going to tell you what our roadmap is to success. And then they could judge us on that. And since we had full control over it, we knew exactly when the right time to raise was, to the point where the last 2 capital rounds that we've run, we haven't had to initiate them. We were in casual touch with investors. We were telling them about how we were, sort of performing against the goals that we set forth. And they said, hey, it sounds like this is the right time for us to jump back in. And that makes the process a lot easier, because then at that point we can say no and walk away and take money later if we want to, or if we do think, hey, this is the right deal, let's go ahead and take it and keep things moving forward in the business.
Eric, as you think about like the next 12 months of growth for Flatfile, what are the big priorities that you have in your mind? Like what are how are you thinking about 2021?
Yeah, it's really interesting with everything that's happening. But what we've seen, and some of this proof point that we've, basically we're like, how are we going to prove out that we're like sort of this pick and shovel type company that's not going to go away with a recession? Well, thanks COVID, like you helped us prove that out. So that was one of the big things that we wanted to do. And not to, say COVID's a great thing at all, but timing does matter a lot of times in your business. And I'm not going to say that we haven't gotten lucky with certain things happening at certain times. But sort of the other thing is, as we grow as a business, like we've defined, hey, there's a market that needs this. That's very clear. What we need to do now is show that we can actually capture that market at scale. So our next fundraise is really just predicated on like, hey, have we proven out that we can really continue to scale this business into this market opportunity that's presented itself to us? And so for us, that means like, what is it like to get a $1 million a year customer from one of these, larger corporations that experiences this problem? And also, how do we sort of like keep the engine running of the business as well as we scale? So who are the right people to hire? How do we design our company? All those things will matter. And really it's just about removing capacity as a limitation to our company's potential. So. Yeah.
Great. Yeah, thank you. Okay, I know we have just about 10 minutes left. I want to try to get a couple more questions in. So flipping it on, like, there's been a lot of the context of Atlanta, but I'm sure there's some in the audience who are thinking about, gosh, with all this, the capital in the market, like the access to capital locally, if someone is in the audience today, Shila, and is thinking about, maybe starting that thing or taking the jump into entrepreneurship, what advice do you have? What should they do? What should they not do?
So, one of the things this is how I look at entrepreneurship. So most people hop in because they're trying to solve a problem, right? They found a pain point somewhere and they decided to do something about it, and starting a company was a way to do that. And so for me, I always tell folks, you gotta, why you, why now? Those sort of things. And if you can't answer those questions, for me, it's like, I don't know if you need to take this journey. You got to know so much about yourself, because this is not for the faint at heart. We did an article today about ageism in entrepreneurship, because most folks think, entrepreneurship typically skews young, and that's true. But I always think about the rejection that comes along with entrepreneurship, even some of the rejection that I have to deal with as a fund manager on a daily basis, and what that does to one's psyche. And so I always want to say to entrepreneurs, just remember why you got into this, right? And then get with some folks and do some sort of, customer discovery. Find out how you're going to make this happen. Thankfully, here in Atlanta, we have Georgia Tech. You can go there, customer discovery, find out if this is something you really, really need to be doing. And so I would say do that. Get into a place, talk to some folks who can go, around ideation and seeing if this is something that you really, really want to do. Because I'm always trying to tell folks, yes, it's sexy right now because we see this happening and we see that happening, but you don't know the trials that those folks had to go to get to where they are. And are you prepared to take no pay for a bit? Like we've been bootstrapping for almost, I don't know how many years now since we started. Are you willing to be able to go without pay? Are you willing to make all these sacrifices? Because entrepreneurship, it could be a very bumpy road, and it's not, it's not the short game. This is a long, well, for me on this side, it's a real long game. But on the entrepreneur side, this is you want to make sure that you're successful. So ask all those questions in the beginning. I think is really, really important. And that's what we kind of do, even for the ones who are in our programs, right? We don't have you're thinking about we have a student entrepreneurship program where those who are like, they may have a company, may have an idea, need to really, think it out. We don't have that kind of program for like the typical entrepreneur. So I would say get into some of these programs, get some help that you need to kind of support your idea, prove your idea out, and then get to work.
Eric, coming to you. So rewind back to when you took the plunge into entrepreneurship. Like, what advice do you have?
I think it's exactly what Shila said. It's not about the idea. And I think that's one of the number one things that people sort of get hung up on. It's like, oh, I have this great idea. I have this great idea. It's better if it's not your idea. It's better if it's someone else's idea, because guess what? They told you they had this problem. And then 100 more people tell you that problem. And so for us, we actually took like a very phased approach. And I've generally taken this approach to any business. I've started a few over the course of my career, but it's always like, unless someone is telling you the problem without you telling them what the problem is, you probably don't have anything yet. And you really need to go back and understand, like, okay, is there a problem here really to be solved? And don't get me wrong, there are plenty of businesses that do start from sort of like technology, and people come up with ideas that they could apply in a market. But ultimately, you still have to test that. And I think that's what people are scared of, is like asking people questions and testing it out and trying to get people to purchase. You'd be surprised. And my main piece of advice to anyone who's thinking about starting a business or is in that idea phase is like, go out and test it. There's really sort of like really simple ways to do it. Throw up a landing page, don't have any software, just vaporware, and see if people are clicking a button. Reach out to folks who would be prospective customers and say, hey, I want to talk to you about your problems with this, and see how they engage, what types of things that they say. And I think just getting out there matters a lot, especially early on in a business. One of the key things we did with Flatfile, this was around this time last year, was we did not let anyone pay for Flatfile without talking to myself or my co-founder, Dave. It was grueling. We had, I think it was like an average of 35 conversations a week with prospective customers. But what it did was it taught us why people would even consider buying this and why people decided they didn't want to buy this. So yeah, just reach out to your market, understand the problem, make sure that they're telling you the problem, not you telling them an idea, and they just nod and say, yeah, that sounds good, and never actually pay for it or show up in the actual sort of like income statement. Like you want to actually get some validation by letting people do things on their own.
Gosh, I can't imagine the volume of like of sales meetings you guys were managing a year ago. Sean, looking to you. So I know you and Michael, you guys are pretty tied into Techstars, a lot of early stage companies there. What like, can you speak a bit to this? Like, what advice do you have for maybe some of those companies that come to you or a little early, or an entrepreneur thinking they're ready to take the plunge?
On the fundraising path, take the plunge, or on the starting the business, take the plunge?
Either or.
Maybe since they spoke so well about taking the plunge, just I'll speak on the fundraising side. I would say two things. First of all, be intentional and have a strategy. I mean, this is a really, really big decision, and don't go down a fundraising route just because you saw somebody do it, or your friend did it, or you want to emulate somebody else's success. It's an intensely personal decision, and it's a really long-term decision, as Shila mentioned. We on the funding side, we plan for a 7 to 10 year investment horizon. I hate to bum anybody out, but the average marriage in this country only lasts 8 years. So you got to really be intentional about how you want to fund your business. And there's not just two options. It's not just bootstrap or VC. There's lots and lots of different funding paths that you can take. And the important piece is figure out what your strategy is, figure out what type of business you want to build and how you want to build it. How long do you want to own it? Are you in it for a few years and an exit? Or are you in it for the long run and the cash flow? Are you somebody who likes autonomy, or do you really value advice and input from other people? Those are all really critical decisions when you're thinking about the fundraising path. And then I guess maybe the other one is a derivative of that is just choose your partner if you go down the VC path wisely because of that relationship, and make sure if you just want money, go after a fund that wants money. If you want money plus a deeper level of engagement, go after that. A lot of times I think founders they're in a moment in time, which is natural, where they focus on the now, they focus on the immediacy of the problems that they're trying to fix by raising capital without having a moment of kind of fresh perspective to step back and think about, who is going to be the best partner for my business now, but more importantly, as I grow through the various stages that are inevitable ahead. And so it's impossibly hard for founders to pump the brakes and take a breath, but this is one that I would highly, highly encourage you all to do if you're considering this plunge.
Thanks, Sean.
Can I add one last point to that too? Because I think it's own that, right? Like if you're committed to the venture track and you want to engage with investors who have specialty in your area, do that. Don't get excited by shiny things over here. It's like, oh my gosh, they're this big multi-stage fund that has billions of dollars. Like, don't do that. Own your decision and say, hey, I'm going to be intentional and go after that. It's really, really helpful because it eliminates a lot of distraction when you do that.
Indeed.
All right, so we have about 5 minutes remaining. So before we wrap up, wanted to make sure every one of the panelists had one chance to share any last thought. And one thing I think that everyone we can all do more is self-help, and especially in this space, there's fortunately there are a lot of great books out there. So I'd ask each of the panelists to share, like, do you have a favorite book that you've read or you're actively reading that you can share with the group? Eric, you're smiling. Let's hand it to you first.
Oh, because mine's the most boring. I'm kind of a pop economy nerd, so it's not like fiction or anything. So things like Signal and the Noise and Moneyball. But I'd say one of the best books I've read in that space, one of my favorites is called Switch. So it's all about using behavioral economics to create positive change. It's by the Heath brothers, but really great stories about how you can leverage sort of human nature to create economic results as well as societal results too. So pretty cool.
Awesome. Sean, over to you.
I actually have no idea because it's impossible to choose a favorite book, but I will tell you the one that had the most impact on me in a very, very long time is a book by David Brooks, who many people know just as a journalist and an op-ed manager, called The Road to Character. And it was super impactful for me, probably less so if I were a younger version of me, definitely when I was kind of approaching 50. And it's really about the different stages in life. And when you're younger, how it's just natural for high performers to focus on what he calls resume virtues, which are the kind of the check the box, here's what I did, I've got this much of that, and I've done all these things. And then how in his personal journey, and he goes back and maps it to a lot of people historically, how at some point that changes to focusing on eulogy virtues, which are the characters and the strengths that you want to be remembered by. And that came to me at a time in my life when I was leaving the PE firm that I was working for. And before I ventured on this path down with my friend Michael, and it was such an impactful moment for me to self-realize how I wanted to spend the next chapter, hopefully the next 50 years of my life, and what I want those 50 years to be defined by. And so I'd highly recommend it. It'll probably not fall on your ears the same way if you're in your 20s, but check it out.
The Road to Character. Got it. Shila, over to you.
So I like history, especially Black history. So I read a lot of that. One of my favorite books it's not really about history, but it was Game Change, the whole political fight of 2018 or whatever year that was. Love that book. But what I'm reading right now is the Startup Community Way. And it's by Brad Fell, because for us, we really want to do this right. And so the book talks about the 7 types of capital you need to have when you're building a community. And so for us, we're trying to make sure that we have all of those, not only just financial capital, social capital, but culture capital, and all of these other things that he talks about in the book. Because for us, it's so important that entrepreneurs feel like this is for them. It's not forced. We're not making this up. We're not hyping up different things. We are actually putting programs together that we're really thinking about the entrepreneur on the other end. And so I really, really love this book. I'm getting into it really deeply right now, just as we start to, ramp up our programming. And so that's one that I really, really love.
Thank you. So I'll add 2 that are on my list. So one is a very practical, book. Many of you might have read it, High Growth Handbook by Elliot Gill. It's a lot of the short blog posts, interviews around how do high growth companies work? What are the things to watch out for? How do you form a board? How do you raise capital? How do you think through M&A? It's a great how-to book. Another book that I love is called Peak Performance. It's by Stolberg and Magnus. These are one is a business guy, one is an athlete coach. And actually it studies how do top performers across business and sports, what are the characteristics that they have? I think a lot of entrepreneurs or those on the outside might look and say, the Elon Musks of the world, they never sleep. They work, 20-hour days. They have the cot in the office. They never turn off. But actually, the way to growth is actually through strain and recovery, and that's how you build and grow and you create strength. So very applicable to many facets of life, I find. So Amin, with that, I will look to you and I will say thank you to Eric and Sean and Shila. This was a great conversation. Thank you so much for the time, the energy. And now we'll head to breakout. So Amin, over to you.
Yeah, and I'm going to echo, Ross, what you just said, Eric, Sean, Shila. Thank you guys so much for bringing in the perspective and really sharing the story as well. And for those that are on the call, as you guys know, we provide a lot of networking opportunity as well. And because things are virtually, we're going to try to do that via breakout rooms. And we've already placed you guys all in breakout rooms. The speakers have been split into different rooms. And then we also have a lot of mentors and other subject matter experts scattered around in the rooms.